Over to Evan Lucas from IG in Melbourne and have a chat about the market today. Evan, starting in positive territory or at least around the flat line, but not too much movement there at all today. Do you expect that to change when we get that Chinese data out a little bit later? Could things potentially pick up a bit?
Yeah, look, we certainly think they still can. I mean, if we look at the market now, we've had 11 out of the last 12 weeks as ups, and if we continue to sort of hold on to what we have at the moment, we may actually see that we continue to do that and make it 4 weeks in a row as well. The one thing that we're really taking a bit of a pause at and having a look at is that this week was quite a negative week for local economic data, and it really has put in sharp focus the main thing that still has households looking quite closely at what's going on, and that's really job security, income growth and consumer sentiment. Yesterday's jobs data, we actually see that as more of a false positive. Yeah, we saw the unemployment figures actually fall to 5.4, but if you drill down further, we saw that there was 9,800 full-time jobs lost, and that was offset by the 20,000 part-time jobs gained. So, look, we actually think that next week, being at Chinese New Year, we may actually get local data finally governing where the market goes, and with a big week ahead in terms of reporting, it may actually go that way. We've already seen this week that the likes of your Telstras, your Woolworths, your Wesfarmers and your big four banks are continuing to drive that market forward as that income focus continues to take hold.
Well, this is it. Now, a rates announcement is mentioned from one of the big four today. Look, an outside chance of diverting and putting a surprise cut out into the market. What's your perspective?
Look, Carson, I severely doubt that. ANZ tends to be fairly cards close to the chest idea. I don't see Mike Smith coming out with any surprise today and moving on rates. It would be a downer on the bank if they did actually move up. There'd obviously be some political pressure there, and it's unlikely to see them to move down any further, considering that they're still being squeezed at the margin. I would therefore not expect anything to change on that front.
Okay, let's talk a little about Newcrest now, because I can see a line here. The performance of the Hidden Valley operation in the 6 months ended December 31 was unacceptable, and this operation is being reviewed closely for improvement. What does that mean? Tell us in more basic terms and in market terms what we're looking at here.
Yeah, look, the result for Newcrest today was an indifferent one. The Hidden Valley unacceptable line was a very eye-catching line. They are continuing to having real problems with their production in both of these places. The other thing that's also sapping a lot of the cash flow that we've seen out of Newcrest is still coming from Lihir and the Calder East project here in Australia. They are obviously trying to ramp up production at these places by increasing the capex they have there. Look, we saw headline figures being really hit quite hard, 51% off on that revenue line. Revenue came in at about 320 million Australian dollars. We do note, however, it was ahead of Goldman Sachs and also Credit Suisse's analysis. Their EBITDA also beat Goldman Sachs as well at 740 million Australian dollars. It's an okay result. They had flagged their production issues quite heavily a month before. They have obviously put their FY guidance for 2013 on the lower end of that 2.3 million ounces a year. Look, all in all, it's a fairly indifferent report. However, the market now sees that all is factored in, and if you had the last look I saw at Newcrest, they had already rallied 3% and a little bit higher. Basically looking at that gold price at 1670 and trending about that area, Newcrest is trying to claw back that correlation that we've been seeing with it over the last few years.
Hey, Evan, just finally, can you just talk us through next week and any major market moving events there?
Yeah, look, this week we saw obviously NAB and Macquarie fire the gun for the financials, but next week's the real big one. CBA will come out on Wednesday with their half-year profit performance. We expect their NPAT to be roughly around 3.6 billion Australian dollars, and also more importantly for those dividend yield hunters out there, roughly about a $1.56, $1.57 half-year div. That's going to be released to the market on the 18th of Feb as well, and obviously will release a fair amount of cash into the market, and it may see us stimulate it further. We're obviously also watching the health care space. We saw Cochlear this week, really disappointing. They've really dropped off quite hard. They're down 15% for the week. So next week we'll see CSL report their half-yearly profits. NPAT on that line is supposed to be 589 million Australian dollars with a div of 40 cents. CSL's been a really good performer over the year. We expect it to hold that line and obviously outperform its competitor in that healthcare space in Cochlear going forward.
Okay, Evan Lucas from IG, thanks for chatting with us this morning.
Thank you.
Well, the nation's major sporting codes are under pressure to reform betting rules after police identified spot bets as being a major risk of corruption.
Well, there's been a report released by the Australian government and the Crime Commission. It's found widespread links between organised crime and all leading sports.
So how can this multi-million-dollar industry recover from the scandal, or has the brand of Australian sport